Hi, welcome to Equisys Financial Services. We always appreciate your interest in learning stock trading and analysis. And for next few minutes, we're going to discuss more about the interesting price patterns called head and shoulder. And we also cover the cup pattern in this video itself. So the both has one similarity because both are an accumulation or distribution patterns. But the only difference between those two patterns is the time, because the head and shoulder distribution takes place because someone is very eager, someone wants to sell it in a short span of time, then the head and shoulder forms. If someone wants to buy things in a gradual phase, and I just wanted to accumulate as and when it happens to me, then probably it forms a cup pattern. So the stronger hands nature can be absorbed if you identify these two patterns. Okay, we 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 generally recommend people to follow knowledge and discipline because that's the key where you become a successful or professional trader. Okay, head and shoulder. The reason why we call this pattern as head and shoulder, because it is very easy to identify graphically, because head shoulder has the graphical pattern. Because if you look at the man, he has a two shoulder and in between is a head, and head is the tallest one. So just try to identify this here. Number one, it is a distribution or accumulation pattern. See, the price patterns is not like a graphical representation alone. Graphical representation makes us to identify things as easy as possible, but the logic behind the screen is distribution and accumulation pattern, because we can recognize what's happening behind the screen. It's nothing but the distributions or accumulation. And as far as head and shoulder is concerned, it takes months of time, because distributions or accumulations doesn't happen just overnight, because it takes longer time, then only it shows some significance. And we will see the one by one the pattern criteria here. First, we have to identify the shoulder head shoulder pattern, where the head is the tallest one. This is to make things graphically easy, and it should take minimum 3 months. Then only I can qualify this is a significant distribution pattern. And we have high volume should take place at the lower shoulder, ensuring that a lot of people are buying and selling, and it is generally due to the intervention of the stronger hand who wanted to liquidate. When it comes to general head and shoulder, which is a distribution pattern, the inverted head and shoulder is the accumulation pattern, but we are actually discussing about the head and shoulder, which is the bearish trend reversal. Probably this is your no expecting the price to go down, and someone who's liquidating is what it is communicating to us. Volume should be low during the right shoulder, that ensures that the stronger hand is already moved out of the market, and we can create short position if the price goes below neckline. Again, we would like to say something. If you are completely new to this market, if you don't even have some idea about the basics, then it's time to go back to the previous videos to think about the study about the basics. Then you can actually get back to the head and shoulder, because without learning basics, if you're watching these patterns, it is just like spending 2-3 minutes, but it doesn't really give you anything about it. So identify the shoulder head shoulder pattern. For that, first open the charts, spot where can you identify somewhere head shoulder pattern, identify this. And I could recognize here there's a left shoulder, and there's a head, and there is a right shoulder for me. Okay, the moment I identify this, I go to the next one. This should take minimum 3 months to form. This entire duration should be minimum 3 months. I have to check the price and check the time scale, and if it is 3 months, okay, then I can qualify this to be 3 months. Then the volume should be high during this area. It is not 1 day volume. During this shoulder time, the volume should be high during this zone. That shows a lot of buying and selling has been happening here. It is only because someone was actually playing in the market. It is none other than the stronger hand. But even after this, the prices are moving up, because he cannot, just because he wanted to sell it, he cannot sell it on day-to-day basis. So sometimes he buy, sell, but he ensured that he is selling more than the buying in an overall perspective. And as the time passes, as he liquidate completely, the volume will drain the market. Probably the volumes will come down. That should witness when it comes to the right shoulder. And if all these things are happening, we are watching all these days and everything is happening, and when it comes to this few days here, we know that it's a kind of distribution, but we are yet to confirm. We can confirm this if the price breaks the neckline, the line which is connected from this top bottom to this bottom. If you extend it, say we call this as a neckline, and if any price goes below this, the hope of the buyer is vanished here. So it's better you can create a short position here, expecting the price to go down. Okay, this is quite true for the inverted as well. So we are not explaining the inverted head and shoulder here. That is meant for accumulation, and someone wants to desperately buying the stock in as early as possible, but the significant quantity which makes the times to extend, that comes under the inverted head and shoulder. The conditions are pretty same. Probably I hope you people can recollect what we had it in the workshop even here. So if you have any doubts, you can actually post it in the comment section below, and we would try to respond it as early as possible. Okay, now we look at the cup pattern. Cup pattern generally meant for someone who is long-term trader, is really long-term trader, probably a kind of investor, because it's a gradual accumulation is happening. Someone is accumulating the stock, sucking the stock from the market, but as he is not very aggressive. So this would take place, someone who just wanted to buy the stock if it comes to my price levels. This is accumulation pattern. It takes longer duration to form, and the criteria are very simple. The cup shaped pattern should be visible. So probably you see the rounding bottom sort of scenario to take place, and the correlation of the market, the correlation of this stock to the market movement should be low. Like, it is not perfectly positively correlated or negatively correlated. It is like, something like, 0.1 or 0.11 or 0.2, 0.3, but not necessarily 0.65, 0.75. It means if the market goes up, this may not go up. Even if the market goes down, this may not go down. And this is completely decoupled from the market. It's nothing but the sign of accumulation. But one thing you have to notice, it should form a kind of a pattern called cup. You should see a rounding bottom should take place. Okay, as far as the volume is concerned, the lackluster volume should witness at the bottom. That should ensure that it's no aggressive buying is taking place. As and when it comes to the comfort zone for the buyer, it is a base. We call it as the solid rock bottom. It's because of cup pattern. So if you find a cup pattern, if it's getting matured, you can buy the stock, but you should hold it for really good time to see a good money out of it. But it's pretty reliable pattern. And long position can be created when if you find the cup start getting filled, so you can create long position. See, inverted cup is generally not recommended because distribution doesn't take place gradually. It takes place in a shorter span of time. So if it is a distribution pattern, we expect the head and shoulder to form, not the cup pattern. It's very rare to see a rounding top. Even if it is a rounding top, we are actually a lot of analysts, I'm following a kind of people who don't actually follow the rounding tops because they don't see a logic in it. Because as I said, it takes when it comes to distribution, it doesn't take longer time because you don't have a choice. If someone identifies the smoke that you're selling, they might come and sell as early as possible, and you may not get the chance to sell it. So, which is not the case of buying. So if I'm not getting a chance to buy now, I might buy it sometime later, so I might buy it sometime in some other stock. The selling, you have no choice but to sell. It happens in a pretty short span of time. So we can expect a head and shoulder, not the cup pattern. Again, we would like to thanks for you people to patiently listening these videos. Now if you complete this video, now we can go to the flag and triangle, which is probably expected to form in a shorter span of time when compared to the head and shoulder, and very frequently appears when it comes to flag and triangle. And flag and triangle is very powerful when it comes to making money also. So it's better you people actually start looking at the next video. If you're not able to understand this head and shoulder, we would still recommend you people to learn the Dow theory better, get the significance of tops and bottom, and understand the concept of demand and supply before getting into it. Mere marking does not give you everything. So understand the price patterns. If you have a doubts, you can contact us at any point of time. You can find the contact numbers here. And if you find this video interesting and useful, we strongly recommend you people to share this, and you can post your feedback in the below comment box. Thank you. Happy trading.